we got a weak candle that showed us the trend was ready to change, and we got this big drop. And right here, you see how we're in this strong uptrend, but then look at this pullback. It pulled us back down to the 200. So the way that we take advantage of that is we have to have something that can detect a short-term trend shift, and that's the 200. I mean, that's the 12 EMA. So when we add our short-term trend detection on here, we're going to see these pullbacks before that, as they're happening, even these ones while we're above the 12. So you see how we're in this uptrend. We got this blue gold cross. When the 12 crossed back above the 200, we got in this strong bull trend because our 200 is yellow and our 12 is blue, showing that our long-term trend is bullish and our short-term trend is bullish. And then here, our short-term trend turns bearish. But not only that, we got a wolf chart depth cross, which is when the 12 crosses under the 200. Now you have a red 12, which is a short-term moving average, and your long-term trend is bearish. So look how easy it is to see downside bearish activity when you have both of your trends in agreement. Same thing here. Our 12 crossed down under our 200. Easy money on puts. Same thing here. Both of them are bearish. So that's your bias got to lean toward puts. When your short term trend is saying you're bearish and your long term trend is saying you're bearish, then you need to be bearish on the stock. There's no point in buying calls if both of them are bearish, right? Same thing here. Our short term trend got under our long term trend. The 200 is bearish and your 12 is bearish. Your buyers has to automatically start looking at puts as where the money is going to be. If your 12 is blue and your 200 is yellow, both of your trends are in an uptrend. Your buyers has to go to calls, right? So just by eyeballing your chart, you'll be able to know what the trend is, or they won't be able to fool you on what the current trend of the market is because you'll be able to see it visually without even having to know technicals, right? So the other part that we have to the chart is the trend lines, and so let's add our trend lines back. So do you see these lines that just popped up on the chart? This diagonal green line right here,
Yes, sir.
and then you have the lower line which is red. Okay, so we had this diagonal red line and we had this diagonal green line. And so when we turn our order blocks back on now and we look at our order blocks, so I wrote code for the moving averages to change color, but I integrated it in with an existing trading view indicator that shows us our order blocks and the institutional buy zones and sell zones and things like that that smart money uses when they're trading. So now we can see how a trade setup would look, and I'm gonna show you all three levels of the confirmation. Okay. So when you're looking for puts, it's three levels to the confirmation system. And what you want to see at level one, when you're trying to get into puts, when you soon you open your chart up and you say, okay, I want to get in puts on Microsoft, you have to make sure that the time frame you're on that you're gonna take the trade on, whether it's on the 5 minute, 15 minute, and you want to look and make sure that you have the setup is telling you and the trend is telling you that okay, puts is where the money is. So if I open my chart up, what I want to see is at level one, you want to see two things. You want to see that you have institutional bears, the smart money, these red buy zones. You want to know that they're dumping the stock too. Okay. If you want to sell the stock and buy puts, they need to be buying puts first. Okay. The second thing you want to look for at level one is you want to make sure that this yellow 200 is bearish because that means that not only do you have smart money pushing the stock down with their money, you also have the long term trend is in agreement with you that Microsoft is bearish. Okay, that's level one. You need your red order block or red sales zone near your trend line, and you need a red 200. At level two of the confirmation, the second step in the confirmation is that you want to see that your 12 EMA, your short term trend, is bearish as well. So you want to see that at level one, bearish sales on your chart, and you want to see that the 200 is red. At level 2, you want to see that your 12 EMA is red. And then the final confirmation is after the stock price passes this red trend line right here. You just want to see a candle show extreme weakness under this trend line. You want a candle to open and close without touching the trend line or the 12 EMA. So the candle has to be the first candle that opens under this red trend line without touching the trend line or the 12 EMA. Okay. So in this situation, is this green candle right here. Okay. So this green candle is the first candle that didn't touch the trend line or the 12. Okay. It's just floating in between both of them. And that's why we call this candle a floating candle, because it's floating in between your 12 and your trend line. So this candle is going to always be after the trend line, okay? For puts or for calls. So we're looking at puts right now. So if you zoom out and you look at what we were looking for puts, you're looking for all red. Red sales on, red 200, red 12, and you want to be under your red trend line. And then once you get a candle that shows weakness under the trend line and the 12, that's your confirmation for puts. If it's a green candle, in most cases, if it's a candle that is a decently strong green candle, you want to enter in close to your test of the 12. So if you're just far away from the 12 EMA, you want price just to come up and just test that 12 EMA, and then you would get just then you enter your trade and you can get a good drop, right? So that's what you want to do when you get this your confirmation. So let's go look at it again for puts if I can find some more puts for Microsoft. Let me go to a lower time frame. So we're gonna look at another example for puts, but then we're gonna look at an example for calls. So let's see. Yeah, so we got some institutional sales zones on the 5-minute chart. It's not so choppy, right? So now here we got another example here. So we got at level 1, we got a red sales zone right here, right? And we got the 200 flip red all the way down here. So we need to wait till the price gets under the 200. So you see how these candles dropping, but we didn't get until we got here. We didn't get a floating candle until we got this candle, right? So we got a green candle here. It's our floating candle. We're under the 200, and our 12 is already bare. So we got red 200, 12 red, red sellers up here pushing us down. We got this green candle. So all we gonna do is wait for a retest of that 12. And as soon as we bump that 12, that's our entry for puts. We already got our confirmation candle right here, because this candle opened and closed under the trend line and the 12 EMA, and it was under the 200. And then if we enter here, then we got our drop from 426 all the way down to 422. That's a $4 drop from the 5-minute time frame. Okay. Now for calls, we're looking for the opposite of that. What we're looking for calls, let me zoom out here. We're looking for at level 1, we want the long-term trend to be bullish, and we want to see bullish money under us. We want green money under us. We want these buyers to be sitting under us, and we want our long-term trend to be yellow, the 200 yellow. Then at level 2, we want our short-term trend to be bullish, so the 12 will be blue if it's bullish, right? And then after we get all three of those, yellow 200, green money, and a blue 12, we're just looking for the floating candle after this green trend line right here for calls. And that would be this candle right here, right? So we got our floating candle here. And you see price consolidated came a little bit closer to 12. And then we shot up and got our, made some money going to the upside here. So you're looking for the same, all your trades you're looking at after this trend line. Now, the reason why this trend line is important and the reason why we use this trend line is because a trend line on our chart can only come from a sell off. So when a stock makes a swing high, you see how this green candle, we got this strong rejection, and Microsoft dropped from 422 all the way down to 420, right? right here. And then if you pay attention, every time a candle tried to get back above this diagonal trend line, it rejected. This candle got close to it, it rejected. The price dropped all the way down here. This candle got close to it, pushed above it and rejected. This one pushed this high up above it, and then it rejected. We got this red candle that pushed all the way back down. This was acting as a level of resistance, but diagonal resistance. So that's why when we dominate it and open a candle on the other side of it without touching it, that's the stop price showing that, okay, it's ready to break out. So then we got this candle that showed dominance over, even though this is a small red candle, it opened and closed on the other side of this trend line and above the 12 EMA. That was our confirmation for calls. Okay. We got this. We got the same thing here at this breakout, even though this was a gap up. We got green money and we got a yellow 200 showing us that our long term trend is bullish, and we got money pushing us up. We got a bullish short term trend with the blue 12 EMA, and then we got our floating candle way up here, and then we get the pop up, right? So the other thing that we add to the chart to help us with these floating candle confirmations, we got another one here in drop. You know, we got a bearish 200, bearish 12, bearish institutional sellers. We got our floating candle here, and we push down to the target down here in this green zone. The other thing that we have on the chart to help us manage our trade is that the chart also helps you to select the correct strike price, a realistic strike price for your trade. So if I turn these support and resistance lines darker, so you can see them on the chart, well, it ain't got to be that dark. Let me see. Hold on. I'll turn these to gray. Yeah, that's cool. So now what I just did is I turned on my support and resistance lines. So on a wolf chart, if you ever charted, if you like have charted any time, when a person say they're gonna do some homework and they're gonna do their due diligence on the stock, 9 times out of 10 they're gonna go get somewhere, chill out, and they're gonna try to chart out the price action by putting lines on their chart, these horizontal lines to map out peaks and valleys on different stocks on different time frames and things like that to kind of see where the support and resistance is, where the A plus trades are, things like that. And so on my chart though, I coded the chart to look over the past 400 trading days of the stock history, and it automatically draws all the support and resistance levels for you, way more accurate than how you could than what you could draw them. And then it also keeps the chart up to date for you. So if a stock goes to all time highs, before you close your chart out, it's going to already plot out the new levels for you. And then not only that, since it's basing it off of historical price action, the thicker these lines are, that means the more times that this line has been touched or acted as support or resistance. So the thicker the lines, the heavier the support or resistance. So you can visually see where the heavy support and resistance lines are. And also, if I move this chart over to here, you can see where the A plus trade ranges are. So you can see where Microsoft can break above this level, and it has like one little level of resistance, but it can pop up from 432 to 440 quick.